Hey everybody, JC Parets here, founder of allstarcharts.com, and I am thrilled to be talking about one of my favorite topics, and that is the technical analysis of financial markets. I get to wake up every day, and it's never a dull day. There's always something happening. There's so many asset classes and so many things moving, right? Literally every single day. How do we keep track of all of that? Where do we start? Where do we start with all this? We wake up in the morning, we check the futures. Now what, right? So how does this work? And that's really what I want to do today is talk about that. I want to talk about the markets in general, overall, what we're seeing out there. And I appreciate you being here, guys. Those of you who've been, following me for a while and our whole crew at All Star Charts and the team at Stock Market Media, of course, we appreciate you. We love you, all the support over all these years. Trust me, I think about it a lot. So don't think I forget it. So that's one of the things that we're here to do, right? That's what we want to talk about. I am incredibly fortunate for many, many years, decades now, actually. I'm the old man in the room that starts with a chart of the Dow and a chart of gold, right? I'm that guy now, right? So over the years, I've learned so many things from so many people, my predecessors, current contemporaries, really smart friends that we've got. So being able to bring that into one place and being able to sort of share these lessons and some of the wisdom, a lot of hard lessons I've had to learn the hard way. That's how the best lessons are learned. And of course, things that have been passed down from the legends that I've been fortunate enough to have dinner with over many years and drinks and coffee and all sorts of stuff, share the stage at conferences with them, all kinds of stuff, podcasts and things like that. So that's what we're here to talk about today is exactly that. And I want to start with the Dow Jones Industrial Average because this is a great lesson and one that I had to learn the hard way. I was, the institutions follow the S&P 500. I'm Mr. Cool Guy. Look at my cheap suit, right? I was that guy. And I was dumb, right? And I can remember Ralph Acampora, a mentor of mine and to many people, JC, do not fight Papa Dow. Don't fight Papa Dow. You know what I was doing? I was fighting Papa Dow. I thought I was too cool for school. I was a big dummy is really what I was. Listen, overlay a chart of the Dow Jones Industrial Average and the S&P 500 and go back 50 years, 70 years, whatever it is, they're going to look exactly the same. So if you want to take some of the parts sort of analysis and perspective on the market and weigh all of the evidence, would you rather do it with 30 stocks or would you rather do it with 500? I'm a little crazy and I do this for work, so obviously I do the 500 and the 3,002 and all that. But just for every investor, 30 stocks. Go through it. It'll take you 5 minutes, maybe. Right? You go through it, you get those right, you get the market right. And also, you're going to find some pretty good ideas along the way. Dow Jones Industrial Average, world's most important stock market index, new all-time highs. I wanted to start out with a chart, right? You got to give the people what they want. Give us a chart, JC. I want an idea. What do you got? What are we buying? Let's go. All right, well, here we go. It's a bull market. So there you have it. So we're going to talk about the current leaders. We're going to do some cross-asset analysis. We're going to talk about how we incorporate, commodities and Forex markets and fixed income markets and help us trade in the United States. I've never traded a credit spread in my life, ever. Never, not once. Probably never will. If I was a betting man, I'd say I probably never traded a credit spread in my life either. However, it's one of the first things I look at every single morning, right? And some markets more than others, right? We're going to talk about the tools that we've got. We have more tools than any market participant in the history of participating in markets, right? Traders, investors, all-time horizons. It's a joke. It's really a joke. But there's an overabundance sort of problem. We have so many tools. Which ones do we use? Which ones do we ignore? There's, I'm friends with the CEOs of so many fintech companies that are building so many cool things. Where do we start? And not to mention, the tools that are household names at this point. How do we find the next sector, right? Let's talk about sector rotation. Technology has been a big underperformer. Contrary to popular belief, technology recently hitting new 52-week lows on a relative basis, generally a laggard. Consumer discretionary, again, big laggard is what we've seen there. So those are the things that I'm thinking about. How is that rotation taking place? We also want to talk about, the question I get all the time, is it time to sell, JC? It's a bubble. The crash is coming any day now, JC. The inversion, the yield curve is not inverted anymore, right? So that's what we're going to talk about here today. So let's do a quick take a look at the market, because today The whole idea is to bring a lot of concepts together into a process, right? Trust the process. And what we're looking at here is new cycle highs, the most amount of net new highs on the New York Stock Exchange this entire bull market. The internals of the market have not been stronger at any point this entire bull market. And the advanced decline line, which now no longer takes into account the distance for new 52-week lows, right? Because there aren't any new 52-week lows, right? There's a lot of new 52-week highs, not like a crazy amount, but there's enough. There's just no new lows. That's why that's there. The advanced decline line is only a cumulative measure of advancers minus decliners, also making new all-time highs. From a sentiment perspective, we are somewhere in the middle. If you are oversold here, and this is something that we're going to talk about, if we're oversold, here, that means there's a lot of risk, right? That means that sentiment is too ambitious, too optimistic, right? And we need a mean reversion. We have that. We're somewhere in the middle. How about the fact that they're buying China? China has been the worst place to be on planet Earth across the board. Look at the 4-year returns getting slaughtered. These are the worst companies on the planet, period. And they're buying them. They're coming in. Look at that double bottom in the CSI 300 index. This is essentially the S&P 500 of China. Look at Kifu, just a good example of that top-down approach, right? You're seeing rotation into a particular country. Then you go into the country. Where's the relative strength? There aren't any Chinese stocks that are making highs like this, like Kifu is. How about the performance that we've seen since that volatility spike at the beginning of August? Look at the leaders. The IPO index, which is filled with classic blue chips like Robinhood and Rivian, right? Classics leading the way. China up almost 20%. Airlines, folks, airlines up almost 20%. ARK up almost 20%, more than doubling the returns of the major averages. Meanwhile, Apple just closed last month at the highest levels ever. Look at equally weighted financials. This eliminates the mega cap Berkshire and JP Morgan, Goldman, Bank of America. It eliminates all that. Looks at financials on an equally weighted basis, making new all-time highs. European financials, not an area where money goes when it is scared. Look at European financials making new 6-year highs. Look at the equally weighted industrials making new all-time highs. Industrials, even the market cap weighted, is pretty equally weighted. There's no component in the industrials index that is more than 4% of the index. So it's pretty diversified as it is. The cap weighted, we live in a market cap weighted world after all, making new highs. Something I wanted to point out, the 50-day and the 200-day, having that rising 50-day above a rising 200-day. We're seeing a lot of that out there, which is historically not evidence of a downtrend, of course. Meanwhile, materials are making new all-time highs. When they told you it was just 7 stocks, they were lying to you. But we did see a lot of underperformance from consumer discretionary. So if this is a major top, then bull market's over, right? You're not going to have a decade-long top in consumer discretionary with a bull market continuing. Quite the opposite. That's the end. And that's not what's happening. They're coming in there and they're buying them. Let's remember what the biggest components are. Amazon is still below the prior cycle's highs, 22% of the entire discretionary index. How about Tesla? Look at this. This is what we call pattern recognition, folks. Big base here in Tesla. Meanwhile, communications, half this index is Google and Meta. So Alphabet and Meta, or Google and Facebook, if you have trouble remembering the changes, of course. This is communications making new all-time highs, and in a time where stocks are supposed to do poorly, which is this September period, stocks are doing pretty damn well. So when I see markets sort of ignoring seasonal tendencies, that really stands out to me. That's what's happening. Meanwhile, from a rotation standpoint, you're not getting that defensive bid. In fact, on an equally weighted basis, consumer staples, the most defensive of the defensive sectors, making new all-time lows on a relative basis, which is something you tend to see very regularly in bull markets, which obviously we're in. And then finally, I wanted to finish with, what's it going to take? What's it going to take to get more bearish? What should we be looking for that get out? Oh shit, it's about to hit the fan, right? We've all been there. It's going to happen again. Part of the market. That's how cycles work. I would look for the new lows list. If we can start getting an expansion in the new lows list, because again, by definition, like literally, you cannot have a bear market or correction of any kind without the prices of stocks falling. Fact. No bear markets, no corrections without stocks falling. Fact. So if we know that, then how do we quantify stocks falling? I look at a new lows list, the 1 month lows, 3 month lows. Because if you're waiting for the new 52-week lows list to spike, you're a little late to the party there. So look for the 1 month lows, 3 month lows. That's what has my attention. And if this was a lot and you're wondering, how can we turn all this analysis, into money? Just click the link below and join us, my friends. Join us for a 12-week course with me and a few of my friends that I'm going to invite over the next 12 weeks to talk about a variety of different topics. And I'm going to go through that now. Click the link. If you're watching on social, click the link. If you're watching here live on Stock Market TV, you'll see the checkout below. I highly encourage you to join us for this particular 12-week course. We're calling it the All-Star Charts Mastermind. We've never done anything like this ever in the history of All-Star Charts. I've never sat there for 12 weeks in a row every single Wednesday when the market closes talking about a very important topic. Never, not once. I haven't invited my friends that are experts in that particular topic to do that on a weekly basis either. So this is very ambitious and very exciting for me. So just click the link below and you can join us by buying our 12-week mastermind for $7.99, or you could join the mastermind and become a member of All-Star Charts Premium for $24.95. Members of All-Star Charts Premium already get this 12-week mastermind. So if you're a member of All-Star Charts Premium, I love you. If you are not, you could join us for $7.99. And let's talk about what we are going to discuss. This is a 12-week course. Week 1 starts tomorrow, Wednesday, September the 25th. That is tomorrow. And what are we doing? We got to start from the beginning. How do we define our personal objectives? Like, what are we doing here? What are our goals as a trader, as an investor? That needs to be written down. That needs to be defined, because if you can't answer that, you've already lost. You've already lost. What are you doing here? What are you trying to accomplish? We're going to talk about risk management. What are your risk parameters? How much are you willing to lose? Like, how do you think about that? How do you structure position sizing? Like, how do you approach the market so that you're not too big? Because that's when you make bad mistakes. That's when you let your emotions drive your decisions instead of the old brain. And of course, we want to talk about time horizon. What is your time horizon? Are you trying to make money today? Are you trying to make money in the next quarter? Are you trying to make money in the coming decade? Like, what is your time horizon? We have to define those. So those are the 3 things that we're going to talk about at first. And I've got some very special guests lined up that I am super stoked to bring you, because I haven't spoken to these particular gentlemen live to a private community that we are here at All-Star Charts, because this is for premium members only, of course, or members of our ASC Mastermind. But this is the first time I bring these gentlemen together in a private setting to talk about these topics. So I'm very, very much looking forward to it. Week 2, we're talking about momentum, why momentum works. A lot of people think about the divergences. We look at, RSI, the relative strength index, and we'll get into all of that stuff, and, divergences and confirmations that we get from momentum, because you hear momentum a lot, but what does that mean exactly? Like, how do we use it to make money, right? Like, great, momentum, fantastic. But like, how do I get paid from it? So that's what we're going to talk about in week 2. Even like in our short squeeze list, like, how do we find these names that are moving fast? It all comes back to momentum. It can have the high short interest. It can have the high short ratio, but it's the momentum. Notice how we sort by 10-day rate of change. It's the momentum. Look at this MACD crossover, a monthly MACD crossover. This is a long-term measure of momentum to get natural gas going. This was a great trade for us, and it all came back to momentum. That's why it's so important. So we're going to define our objectives, risk parameters, time horizon. Week 2, we're going to talk about momentum. Week 3, intermarket analysis. John Murphy, the man, he introduced me originally to intermarket analysis. This was in the early 2000s. I will forever be grateful. It's very easy to overthink the intermarket analysis. So we're going to talk about that as well. And when we talk about intermarket analysis, we're comparing assets. We're comparing different asset classes here. For example, copper gold. This is a copper gold ratio, has a lot of implications in the bond market, and certainly in some of the rotation within metals stocks. So a very important intermarket relationship, for example, one of many. Here we're looking at junk bonds relative to U.S. Treasury bonds. Again, a measure of credit stress in the credit markets, which tends to spill over into the stock market. So when there's stress in credit, look for volatility to pick up in the stock market. So that's why it's important. So just a couple of examples of the intermarket stuff we're going to discuss. Week 4, relative strength, guys. Money goes to where it's treated best. And sector rotation is the lifeblood of a bull market. That's just what it is. Here's a great example of consumer discretionary relative to the S&P 500, relative strength, not to be confused with the relative strength index. The relative strength index is a momentum oscillator. The relative strength is one asset compared to another. In this case, the consumer discretionary stock market as represented by the S&P. Week 5, guys, sentiment and seasonality. Technical analysis is the study of the market, but by definition, also market participants, right? We are studying both. So in week 5, we're going to be talking about the behavior of humans throughout the year. We're going to talk about the fear and greed in humans and how that's really what's driving markets here. It's positioning and how we quantify that. Here's a great example of a sentiment composite that we've built. I'm going to walk you through how we build it, why we built it that way, how we think about it. We're going to dive deep into that. And of course, the seasonality, as I mentioned to you before, markets in September of 2024 acting as well as they did in an environment that September is the worst month of the year. It's supposed to be a weak month, and it was not. So when that's the sort of thing that stands out to me, we'll discuss all of that in week 5, of course. Week 6, pattern recognition. The market is fractal, regardless of whether you're looking at long-term time horizons or short-term or intermediate term or even day trading. There are patterns in the market that repeat themselves because the market evolves, the robots change, you get new asset classes, all those things. But it's the humans. It's what's going on in between the ears that is driving those prices. And we could see those patterns that repeat over and over and over and over again. And we're going to talk about that in week 6. Week 7, how to incorporate moving averages, right? We just talked about the 50-day and the 200-day moving average and how throughout 2024, you're seeing a lot of 50 days above their 200-day moving averages, things like that. Here's a great example of industrials. And we're going to talk about how we use them. We don't use them for support and resistance purposes. Moving averages are smoothing mechanisms, right? And you also have the anchored VWAP. And these are volume-weighted average prices, which is a moving average. And there is support and resistance at these levels because there is price memory. So we're going to get into all of that stuff. Week 8, the way to make money in dividend stocks is not by buying stocks that pay high dividends. In fact, that's actually a great way to lose money in dividend stocks. So we're going to talk about how we like to do it. And we are looking for companies that are raising their dividends. We're going to talk about why. And how we do that. And of course, small caps, guys. Week 9, we're going to dive into small caps, why they're such an important part of the portfolio. I got to tell you, I've been doing this a long time, and small caps are easy to miss. They fall through the cracks because how are you going to know about this obscure billion-dollar company in Virginia that, prints coins for foreign countries? Like, how the hell are you supposed to find out about that? So the way we do that is because we have the minor leaguers that is scanning only small cap stocks, looking specifically for relative strength, positive momentum, because even in tough markets, when stocks are under pressure, markets are under pressure, you're still going to find small caps that are doing well, right? And even when the market is ripping, like doing fantastic, you're going to find small caps that are doing terrible, right? So it works both ways in small cap land. You're going to have less correlation with the major indexes as you go down the cap scale. This is a fantastic list, not to mention you're going to get huge moves, obviously, right? But it's bigger than that. There's a lot of things to that. Week 10, we'll be almost done here, right? Rounding the turn. This will be week 10 after Thanksgiving. We're talking about profiting off of short squeezes. We already talked about the short squeeze list, but what we're looking for very specifically is the short ratio. Having a high short interest alone is not enough. What we're looking for specifically is how many days to cover. At the amount of shares short, how long will it take, how many days based on the average daily volume will it take all of those shares to cover, right? The bigger of it's 18, 20, 25. That's what we're looking for. A great example, Carvana. When you talk about short squeezes, this is the poster child. This is the blue chip It's so funny. The blue chip garbage stock, right? The blue chip short squeeze stock, the blue chip meme stock, whatever you want to call it. How do you find it? How do you find these names? That's where the short squeeze comes in. Week 11, this is the second to last week. We're really finishing up here strong. We're looking for the mega caps. That's really what this is. These are the names that are driving the indexes. These are the most important stocks in America. 150 largest companies, any sector, 150 largest companies. These are the mega caps. These are the names that are driving the sector indexes, the major stock indexes. These are the Hall of Famers. You know them all. Not only do you get good market analysis, because if you get these right, you're going to get the market right, or you're going to find great ideas, because these are the big, these are the most important companies in the world, duh. So of course you're going to find great ideas from here. And also it's an options trader's, dream, right? If you trade options, pretty much all of them trade liquid options. And we do the same thing internationally. So these are the international Hall of Famers. Think UBS, think, Royal Dutch Shell, ASML, Novo Nordisk, Petrobras, right? Think about all these foreign names that you know and you trade. They trade here in the United States. We could trade them just like Microsoft and Apple. But these are important names around the world. Honda, Toyota, HSBC, the list goes on and on. Mercado Libre, great example. This is the Amazon of Latin America. Look at it compared to the Amazon of America. It looks very similar. That's why these Hall of Famers are so important. It really gives us a lot of information and great trade ideas, of course, because these are literally by definition the best companies in the world, as opposed to the Chinas, which the market has voted and are currently and have been the worst companies in the world. So we want to pay attention to the best ones, of course, as well. And then finally, week 12, how we find the next $100 billion company. Now we're getting down into momentum. Now we're getting down into growth stocks. Now we're getting down into, that 15, 20, $30 billion company, that sweet spot there. I encourage you to go back, talk to the old timers, go find traders that have been doing this for 40 years, 50 years. Talk to the portfolio managers, mutual fund managers that have been doing this since the 80s and 90s. Find them, go talk to them. You know what they're going to tell you? Their biggest winners ever came from mid caps. And this was back in the day when mid caps were mid caps. Now mid caps, in my opinion, based on market cap inflation, as I like to call it, mid caps really extend to about 30 billion. Let's be serious. $10 billion is not a large cap stock. That's ridiculous, right? So 30 billion, you're still a mid cap in my opinion. So think about that market cap inflation. Talk to the old timers. They'll tell you these were their biggest winners of their career. I guarantee you. And if I'm wrong, you call me and you tell me, oh, I met this one guy and he said that wasn't right. Yeah. So call me. This is a great list. Some of the best ideas in the world come from this. They're only growth sectors. So think semiconductors, think, hardware equipment, internet stocks, consumer discretionary, solar, biotechnology, the names that can scale from 10 billion to 100 billion, right? And a canning company or some kind of packaging company is not going to be able to do that, right? You're looking for those high growth stocks. And then, of course, just a good example, Zebra coming out of that 2 to 100 club list, of course. So, guys, this is the All-Star Charts Mastermind. We're going to go once a week covering these particular topics, getting you ready to approach the market from a much more confident and informed perspective, being able to weed out the noise and focus on what actually matters. And then you're going to hear from some of my friends. Most of them are good friends. Some people are just people that I know, but a lot of them are good old pals that I'm like, they're going to come and give their perspective. And, I'll be the first to tell you that in some of these concepts, I would trust them more than I would trust me, right? And in a lot of cases, I'm quoting them and I learned a lot of stuff from them anyway. But, I think it really helps to hear, conversations about the same topic from a few different perspectives, because I think that in my experience, and I hope that we accomplish that, I'm confident we will, is that multiple perspectives and the same thing said in different ways could hit home differently for different people, right? So I want to make sure these concepts are we really stress upon them, because I think they're really, really important. And having some of my really, really smart friends, fortunately, to swing by and share their thoughts on these topics, I think could add a ton of value. So we're going to do that as well. Of course, 30-day risk-free, like we like to do around here. You are not obligated to do anything at all. If you decide that this mastermind is not for you for whatever reason, no problem. No questions asked. full refund, of course. And if you are looking to become a member of All Star Charts, this is a fantastic opportunity because you are getting a premium membership for an entire year, as well as that 12-week mastermind that is only for premium members of All Star Charts, unless you subscribe today with the mastermind special. But you're going to get the All Star Chart scans, the 2 to 100, the minor leaguers for the small caps, the young aristocrats for those dividend stocks, the short squeeze names, the Hall of Famers, which are the big ones. You get everything that has to do with gold and precious metals and commodities. You're getting our bond report and interest rate stuff. Highly, highly encourage you to take advantage of that. Of course, 24/7 access to the trade ideas page. So you're always up to date. Just go to the page. You can see the latest ideas. No problem at all. You could sort and filter any way you'd like. And then we do 2 conference calls a month. Live, just like this. Much more extended, usually about 130, 150, 160 charts. We're there for about 70 minutes live twice a month, once at the beginning of the month, zooming out, looking at the bigger picture trends. And then again, in the middle of the month, where we dive into some key themes and markets that really stand out. Access to our team, I think, is really beneficial as well. We want you to think about it as like this. So much better to approach the market, as somebody who needs to put money to work on a regular basis, whether it be professionally or whether it be, managing your own portfolio or a combination thereof. But there's a lot of people in this world, as I've come to learn, that have to put money to work on a regular basis. They're looking for ideas. They're looking for perspective. They're looking for a heads up if shit's about to hit the fan. There's a lot of people that are like that, right? I am one of those. And it is so much better to do it with a team, right? Instead of going at it alone, right? Going with an army. And if me and our team, I roll with quite the entourage, right? Shout out Steve Straza and Alfonso and Louis and Grant and everybody out there who pitches in and really helps out on all different perspectives. It really is truly a blessing to be able to participate in markets every single day with a whole team. And that's really what this is all about. So you can reach out to us at any point and ask any questions, and knowing that you have a whole team sharing ideas and everything like that, to me is very, very comforting. And then finally, listen, the last thing that I wanted to say is that we're going to have some surprises. We're going to have some surprises because if you know me, you know that somehow I just pull through, when we don't know what we're going to do one night and the whole team's in New York, next thing you know, we got a party bus taking us to, all kinds of pizza places all over town, right? You never know. I came through. Nobody knew what we were going to do. I didn't know what we were going to do. As it turns out, it was a hell of a night, right? That's just how it works. Sometimes surprises come. And I have a funny feeling that we're going to drop some added value along the way to make this 12-week mastermind the best experience for everybody. And selfishly, myself too. I think this stuff is great. So I want to make it the best possible just because I get to listen and I get to learn also. Let's remember that. There's a little bit of selfishness here too from the mastermind. So I'm super stoked. Everybody out there, I appreciate you. Understand that, a lot of work goes into this. There's a huge team behind this to try to add the most value possible and make sure that you're having a great experience. And then finally, making money, right? That's what we're trying to do here at the end of the day. Funny, haha, yeah, we want to have fun and, we want to learn and all that stuff. Yeah, that's great, for sure. But we want to make money. That is the goal here. And everything that we talk about throughout this 12-week mastermind is specifically designed to help us make money. That's the goal. So it's very shameless. I don't care. You can think what you want. We're here to make money. So with each one of these topics, it's always going to come back to that. What's the bottom line? How are we going to profit from this? And that's what it's all about. So guys, I appreciate you being here. Thank you so much for your time and attention. You could be anywhere in the world, but you're here with me. I appreciate that. I hope you join me for this 12-week mastermind. We got a lot of friends coming through, going to have a lot of fun, going to learn a lot. And for sure, we're going to make money. How can we not, right? Let's go. Adios.